Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. In this webinar, we're going to talk about market depth. So this webinar is titled Market Depth: Advanced Strategies for Order Flow Analysis and Scalping. So if you are doing intraday or doing scalping, then this session is just right for you. Now, understanding market depth can help us to read the market better, spot hidden opportunities, and also anticipate move before they happen. Because by analyzing large or unusual orders, we can refine our intraday strategies and make more confident trades. So if you want to learn how to harness market depth and order flow to make smarter and more profitable decisions, so you're in the right place. Okay. So today we're going to talk about this. Now, before we begin, as usual, disclaimer, whatever we share in this webinar is only for educational purpose. So in no way that we give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decision, you are solely responsible for all your investment risk. Now, allow me to briefly introduce our speaker today. He is the Chief Operating Officer of TED Optimus. He holds a CFA designation demonstrating expertise in investment analysis and portfolio management. He has 10 years of experience in the financial industry, covering various roles in research and trading. He previously worked as an equity research analyst, conducting in-depth analysis on stocks and market trends. He also led his team to win the championship in the inaugural Bursa Malaysia Invest Hack 2020. So he's none other than Mr. Charlie Yuan. So Charlie, how are you today?
Hi, Shane and audience. Good day. Good day to all of you.
Yeah, good to see you here. So I would like to hand over the session to you. I will stop sharing my screen and you may proceed to share your screen.
Okay, Shane can see right.
Yes, fantastic.
Okay, good day to everyone here, to the most ambitious, most open-minded, and most eager to learn investor and trader today. Today we'll be covering mastering market depth, and I'm Yuan Jing, your speaker for today. And we'll be looking through market depth. We'll start with the theory, and then we'll go through pre pre-market, which is auction timing. We'll look at how does the market depth looks like, and then how do we calculate the theoretical operating price and theoretical closing price, and then we'll look through some strategies on scalping, and then we will play some video, and then lastly we'll look into some market depth, market manipulation that you may spot on on during live trading hours, and then we'll look into the flow, which is Sasha. So today is a basic disclaimer, is for education purpose. Is we are not recommending any stocks. And oh yeah, just now Shane introduced me. I actually work as a trader as well, a proprietary day trader as well. So I have experience in the market depth and also the intraday trading as well. Okay. Okay, so first, understand the mechanics of order flow and how it influences market depth. So generally, if you look at market depth, if there's multiple price level, this is not what we will normally see in our Bursa Malaysia stock market depth. But if you are looking at future or other instrument, then we'll be looking at something like that lah. So how do you look at this as the market depth? So over here you are seeing multiple prices at the middle bar here, multiple prices, and then left you see the volume at the bid side. Bid side means you have the bid side and the ask side. Bid side means that people are queuing to buy at this price. And what's the volume? It's the blue color coded column. And on the red side, which is the ask side, people are queuing to sell. So it's a very general general logic is that people are more likely to sell at a higher price, and people are more people are queuing to buy at a lower price. So if there's a match, people are buying and selling at the same price, then there will be a transaction. So if you see a market depth, we will normally see that there's no there's no opposite volume on the same price. Okay, for example, 2872.75. There's 10 lot people are trying to buy, but there's empty here lah, because if there's a number over at the ask side, that means bid and ask will match and become a transaction. And so this is what we will normally look at if there's a is in future or in other instrument. And because in future the market depth can go to many levels, different from Bursa Malaysia where we only maximum show 10 market depth. Okay, so this is how it will look like for the other kind of instrument of market depth. Okay, so there's a little explanation over here. If you see the prices over here, and this is the buy volume at the left side, sell volume at the right side, and then if it's a match, then it will become the volume. So there are some limitation of the market depth because market depth only shows buy and sell limit order. They will not buy stops and sell stop will not be shown. So let's say people have hidden order. There are different kind of order in the market. There's limit order, there's market order, and another kind is called stop order. Stop order we'll explain more later as well lah. So this is more introduction on the intro the entire landscape. So for buy stops and sell stop, we will not be shown because when the market price hit the stop price, then the price only will be shown to the market. So buy stop and sell stop is a kind of hidden order towards the market. So what we see are all limit orders. Limit orders mean people are trying to queue at that price to buy, queue at that price to sell. Okay, so over the counter also will not be shown in the depth of market. And also market order execution. So if you are placing a market order, it will reflect in the immediate ask price. So let's say this is these are the people trying to sell at this level. 2873.75. There are 5 lot. So if you place a buy order at this price, 2873.75, then your order will be matched directly and then you will become a transaction. If you place a sell order in the immediate bid price, so this is the immediate, which means that is the surface of the market depth. If you place it here, and this will match with the immediate bid price, and then it will become a transaction as well. So this is what a normal market depth you will see in Bursa Malaysia stock market. In all your broker, you will see that such market depth. So this is a 10 level market depth. And over here is the same thing. The different prices. Left hand side is the people are trying to queue to buy, which is the bid order. And have the right hand side are the orders that people are trying to queue to sell, which are the ask order. So over here, the surface you are seeing 0.42 and 0.425. 0.42 means it's the immediate bid price people are queuing to buy. And what is the volume? You can see over here is 21.3K. It can be in volume, in shares, number of shares, or it can be in lot size lah, depending on your portal or depending on your broker. And how many people are queuing at this price? Then you can also see in your broker side. I believe most of the broker will show all this lah. But some of them they are showing only 3 levels. Some, if you apply with them, then they will show 5 levels. The rest, if you pay an additional small amount, then you can show 10 levels of market depth. So bid price, all 10 levels are bid price, all 10 levels are ask price at the left hand side, and selling volume at this price. So okay, so entire left-hand side we are called the bid lah. Bid price, bid volume, and also the number of players queuing to buy this stock. So if you see there's 3, 15, 15, not necessarily there's three account queuing to buy. Sometimes if it's a big stock, then you may see one account queuing for multiple prices. So if you see 15, the maximum number of people queuing to buy will be 15. But sometimes one account you can split your order and become a separate order. So it's the maximum number of people queuing is 15 now. So this is what we see at the surface of the market depth. Okay, so normally some portal they will show black, green, and red. Black means the previous close price. Green means the price above the previous close, and red means the price below the previous close. So this is easier for you to know about the situation of the market depth according to the previous closing price of the stock. Okay, so over here, sometimes you will see their larger volume, larger total buy volume. That means that for this market depth is represented by the gray bar. So if you see at the gray bar, you would know that out of this 10 level, this 285.7K is the highest volume of this price level on 0.415, which means that out of these 10 levels of market depth, this price has the largest buying volume. And from the right hand side, it's the same thing. If you see the gray bar, then you see 426.4K is the largest volume out of this 10 level. So why is this important? Because normally if the volume is large there, is either it's a very large, a lot of people are queuing there. There may be reason people are queuing there. Either it's a resistance level or is a psychology level. So psychology level means like 1 ringgit, 2 ringgit. So 1 ringgit means that when people are trying to call their remisier or broker, help me to queue. Normally you won't say that help me to queue at 0.985. People will directly mention queue, help me to queue at 1 ringgit. Because this kind of psychology level, more people are actually trying to queue at this price level. So that's why this kind there's always reason why there is certain price level the volume are larger. So that's why looking for large large volume of each of the price level is important if you are doing intraday trading or scalping during the live market. Okay, now let us try to understand about the market depth in pre-opening and pre-closing. So for our Bursa Malaysia, 8:30 until 9 o'clock is auction time. So what is auction time? Auction time and continuous trading is two different kind of market. Auction means that you can queue at any price as long it is between the limit up and limit down range. So you can queue at any price, and then within the auction price, you will be matched towards the best price for both the buyer and seller. Auction is like you are bidding for something. Like for example, the auction normally people will think of that hammer, and when the judge hammer to the table, then it means that you are the transaction goes through and you are successfully you bid for a certain item, maybe a antique or some antique vase or antique painting. So all this kind you guys may go for auction. So in Bursa Malaysia, we do have auction time as well. So there are three auction period in Bursa Malaysia. First one is between pre-opening until opening, which 8:30 until 9 o'clock. Second one is before lunch reopening, 2 o'clock until 2:30. This is also auction time. And the third one is 4:45 until 4:50. This one is pre-closing until close. This one is also auction time. And every time after auction time, there will be a opening price. And for 9 o'clock one, we call it theoretical on the opening price. For 2:30 after lunch, we also call it theoretical of the opening price. And for 4:50 until 5 o'clock, this is trading at last, which is our theoretical closing price. So why do we what's the difference between opening price and theoretical opening price? So opening price will appear at 9 o'clock. Theoretical opening price is the price that should be the opening price between 8:30 until 9 o'clock. So between 8:30 until 9 o'clock, people are queuing at the bid side, at the ask side. People are trying to auction for auction for the stock. And then between 8:30 until 9 o'clock, Bursa Malaysia will indicate you what is the theoretical opening price. Means that if now is 9 o'clock, then the opening price should be how much? They will indicate you first before the opening price really happen. So in your broker account, then you will also be able to see the theoretical opening price. So if you see the theoretical opening price is 42 cent, that means if you queue at 41 cent, you won't get your stock straight away at the opening because people are queuing at a higher price. So if you want to buy at 41 cent, then you will be queuing behind. The highest price for the bid will get the lowest price for the ask will also get first. So this is the rule for auction. And between so there's between 8:30 and 9 o'clock is the first theoretical opening price. So indicate throughout 8:30 and 9 o'clock until and then on the spot on 9 o'clock, then we'll show you the opening price, which will mark on the chart or mark on your platform directly lah. So the opening price, the theoretical opening price will not be shown in on the chart, but opening price will be shown because theoretical opening price is not a real transaction. It only indicate you that what will be the theoretical opening price if it's 9 o'clock lah. Okay, so this is a theoretical opening price. First period only auction time have theoretical opening price. The first period 2 until 2:30 another theoretical opening price will be shown on you, and then on 2:30 we'll show you the opening, and 4:45 until 4:50 theoretical closing price, and at 4:50 at the closing price. So between 4:50 until 5 o'clock, you can only transact at one price, which is the closing price. So if you are trading in the market and then you queuing, what after 4:50 I try to queue at other price, my order is rejected. It's because your price is not the closing price. Because there's a rule in Bursa Malaysia, if it's after 4:50, then you can only transact at the 4:50 closing price. And until 5 o'clock, the entire price will be the same lah. So you can still buy and sell, but must be the price of the closing price. And there's some matching mechanism for the theoretical opening price and theoretical closing price. So like I say, this TOP and TCP only happens on auction time. So have you thought of how is the price calculated? Why sometimes the price can gap up, sometimes can gap down, and sometimes just follow previous candle close. So this is actually based on Bursa Malaysia ruling on the auction time. So between the auction time, you can queue at any price. So you see why is during auction time, sometimes you'll see it quite funny. Why is there people trying to buy and sell at the same price? If you have wondered that, that's because you are looking at the market during auction time, 8:30 until 9 o'clock. So you are seeing buy 42 cents, even sometimes 43 cents, people are trying to buy, but then people are trying to sell at 42 cents. So buy higher than sell is shouldn't it be a match or a transaction? No, because you are seeing it during auction time. So during auction time, you will have certain rules. Dur- During the 8:30 until 9 o'clock this period, they will accumulate all orders, and at the spot or at 9 o'clock, then they will calculate the opening price for you. So what is the algorithm to calculate the opening price, and how can we take advantage of the algorithm? So there are four rules. There are four. First is theoretical opening price is the price that maximize the number of shares traded. I will go in depth for the next few slides, but this is the general one. The second, if there are more than one price, so if there are more than one price that the shares traded, the number maximize, then the TOP, theoretical opening price, will be based on the one with minimized the number of unfilled shares. So we also go with some examples later. How do you calculate the unfilled shares based on the bid minus ask difference? And third, if still cannot find the opening price, then you go to number three. If there are still more than one price based on rule number two, and the imbalance of unfilled shares on the buy side, the TOP will be the highest price. So unfilled shares on the bid side, bid means the buy side, then the TOP will be the highest price. If it's on the ask side, then it will be the lowest price. And still cannot, it will be closest to previous close, the reference price, which is the previous closing price. So there are four rules to identify the opening price based on the market depth. So this is rule number one, determining maximum executed volume. So over here you see there are multiple price over here, 2.98, 2.99, 3 until 310. And you are seeing different people are queuing buy queue 4,500 quantity at the 3.1, 8,500 people queue at the sell price. So this can only happen during the auction time. Because auction time you can put any price that you want as long it won't limit up or limit down. So let's say the stock is 1 ringgit previous close. So the next day you can maximum you can only put 1 ringgit 30 cents because above 30 cents is limit up. So there's a limit lah. So it's not like you want to put any price you can put that. There's a limit for you. Okay, so 4,500 3 ringgit 10 cent, 8,500 3 ringgit 10 cent. So this is the auction price that people are putting and the volume people are putting accumulate. So if you want to calculate the rule number one, then we actually need to know the cumulative buy quantity and also the cumulative sell quantity. So for cumulative buy quantity, why is it this for 4,500? The cumulative buy quantity at any price is the buy quantity that the price plus the sum of the buy quantities at all highest price. Okay, so let's say people are trying to buy 3 ringgit 10 cents. So this is the highest price. 3 ringgit 10 cents is the buy highest price. People are trying to buy 4,500. So cumulative, we add up everything is 4,500. The next row, this is actually 4,500 plus 28,200. And accordingly, this the last one will be 2, 4, 6, 8. These 8 rows add up, you will get 108,700. So what does this mean? This actually means that if the price is 3 ringgit 08, that means people queuing at 3 ringgit 10 cents will also get at this price. Because if I want to buy at 3 ringgit 08 cents, 3 ringgit 3.08, then of course people queuing to buy at the higher price will also get that product. So they will calculate how many people, what is the cumulative buy quantity. If let's say 3 ringgit 08 cent is the opening price. And at the same time, they will find out at the queue side, at the sell queue side. So people are trying to sell at 2 ringgit 99 cents at 3,600 and 2 ringgit 98 cents at 11,600. So 11,600 is the lowest price. So if people want to sell at 2 ringgit 99 cents, for sure 2 ringgit 98 cents are able to sell their stock as well. So that's why the cumulative 15,200 is actually we need to add up those prices that are lower than them. So 15,200 is equal to 3,600 plus 11,600. So by first calculating this, then you will actually able to know the maximum executable volume. So 5,500 at the bid side, 60,000 at the ask side. So if there's a match based on the cumulative buy and sell quantity, they will take the lowest number lah. So these two number, the lowest one is 4,500. If the opening price is 3 ringgit 10 cent, then there will be only 4,500 match in the transaction volume. Like the rule one stated, we want the maximum volume match for your opening price. So definitely 3 ringgit 10 cent is not your opening price. Same thing, 32,700, you calculate everything on the buy quantity, everything on the sell quantity, then you will find out that these prices all have the same maximum executable volume. So based on rule one, we still cannot judge what is the opening price. Then we need to go to rule number two lah. Okay, so for rule number two, which is to establish the minimum surplus. So the surplus, how do you calculate? You take the cumulative buy quantity, you deduct the cumulative sell quantity, then you will get 18,800. You may think that all this mess, what does it do for me? I will later after talking about all these four rule, I'll tell you some trick so that you can take advantage of the market depth during auction time to get your stock you are even though you are you are not supposed to get it, but then you have a method to get the stock. I will talk about that later. So that's why the reasoning of talking about this number will lead to that actual application lah. So 32,700 minus 51,500, you will get negative 18,800. This is the surplus lah. So after deducting the two, then you will see that there's 1,900 negative surplus, deficit, 1,900 surplus, 1,900 surplus. So these three numbers are still the same. So based on rule number two, there's still no match for the opening price. So we have narrowed the range of the price. Before that, out of these eight price, they are both buy and sell quantity. After rule number one, we are left with 1, 2, 3, 4, 5. After rule number two, we are left with 3. Okay. So based on rule number 3, this is a negative sign indicates the surplus will exceed on the sell side. A positive sign indicates the surplus will exceed on the buy side. So if buy side is more than sell side, then it's a plus lah. A negative means that cumulative sell quantity is higher than the cumulative buy quantity. Okay, so based on this, we will we have three numbers left. So if we have three number left, so if it's on the buy side, then we'll take the if it's on the buy side, then we will take the highest price. If it's on the sell side, we will take the lowest price. Okay, so there are still three choices for us. So we will come to the rule number 4, consulting the reference price. So what's the reference price? The reference price is the previous trading day closing price at 3 ringgit 04. So based on this scenario, we will get 3 ringgit 04 as the opening price because rule number 1, rule number 2 doesn't meet yet. So we come to rule number 4, which is getting the previous closing price. So let's go through some example. So this is the auction market. You are seeing 7.17, 7 ringgit people are trying to bid to buy, 6.9 people are trying to buy. So if you want to buy, you for sure need to queue above the theoretical opening price. You need to queue above the TOP, else you won't get your stock. If you want to sell, you need to queue below the TOP. Then you will straight away get your stock match during the opening price. So this is how the auction market works lah. Okay, so we take all the numbers and we put it under here. 6.83, 6.84, 6.85 until 6.9. Then we calculate the cumulative bid volume. Cumulative bid volume 6.83. Those stock above 6.83, those volume at the price above 6.83, 1, 2, 3, 4, I will add up all of them, I will get 9.2. 6.84, I will get 6.8k plus 400 plus 1.1k. It's 8.3 lah. So 6.84, as long the prices are above 6.84, it will be the cumulative bid volume. 6.84 is the 8.3k is equals to 6.8k plus 400 plus 1.1k. Same thing goes to the cumulative ask volume. 6.83 you get 33k. 6.84 you get 6.84. Those price below below or equal to 6.84 is 33k plus 20k. So 33 plus 20 you get 53. And then 6.85 another 20 you get another additional 20 is 73. So you add up everything and maximum executable volume you will see that is actually 8.3 lah. 8.3 for all this level. So the maximum one, the largest one is 9.2 lah. So for sure your theoretical opening price will be 6.83. So as shown here, TM opens at 6.83 lah. And this is the first price with the largest volume match. I'll go through another example, but before I go through the second example, I will tell you the trick. How do you get your why is it important to calculate this auction market depth? Because if you are looking to buy, and if you are looking to buy at a small volume, then you can calculate the theoretical opening price. And if you know how to calculate this, then you can queue at the price that won't affect the theoretical opening price, but then you can straight away get the volume. So by queuing to buy during the auction time, and if your volume is small enough lah, if you are not a big player, if you are queuing to buy a small volume, if you queue to buy, then you will get the price at the opening price. And the best part is once the market open, you will see that the bid there are still people trying to buy at the theoretical opening price, but then you get the stock without risking, because if at the opening price then you see there's some negative movement, then you want to sell, you can straight away sell back at the same opening price. Sell back at the same price lah. So let me reiterate, because this may not be so easy to be understandable. Later I will show you a video with all the auction time and also the continuous time. Then you will be more familiar with this. So if you want to buy your stock, so what is the theoretical opening price? Theoretical opening price is 65, 0.65, and 0.65 they are higher cumulative ask volume. So let's say you want to sell your stock. You want to sell your stock because this is a larger cumulative ask. The ask size have a larger volume. So let's say you want to sell a stock. Normally, you want to sell a stock, for sure you need to queue below 65 cent. You want to straight away grab those buyers, to the buyer grab your stocks. So if you queue below 65 cents, and if you queue below a price 60, let's say 0.645, and you queue for 7K to sell, then the theory the theoretical the theoretical opening price will be still 0.65. Because if you queue at 0.645, let me have some pen now. If you queue at 0.645, let's say you have the stock and you want to sell, and you queue to sell 7K, then this 645 will not be the theoretical opening price, because it will only match 7K. But 0.65 will be the theoretical opening price. So this is the TOP lah. So if you queue right before the market open, 0.645, 7K, this 7K will be executed, and you will straight away sell your 7K at 0.65. And when market open, then you will see 0.65, people are still queuing to sell. But then you are able to sell your small quantity based on this theoretical opening price. So this is the small trick. So you are able to cut queue in a way that you are a smaller player, you have the chance to cut queue from the larger player. Same goes to the buy queue. If the buy queue is a dominant buy queue, then you can do the opposite as well. You can cut queue to buy the stock, and then people are not able to get the stock, but you are able to get the stock. So this is why knowing this market depth for auction is beneficial. So you can able to get the stock earlier than other. Okay, so like this one. So this was P Globe theoretical opening price 0.65, and this was the maximized executable volume. So from here you see 7.1, 7.1, 7.1. But this is the least surplus. So this is rule number one. Rule number one, we have three more options. Rule number two, we have left with the last option. So this is the TOP lah, 0.65. And the last example, same thing, the least surplus, the highest. First, we look at the largest executable volume, 39.7. So this will be the TOP lah, 1.23. 1.23. Okay, so we are done with talking about the auction period. So let's talk about the continuous period, which on the market depth during the continuous period. So to recap, when is the continuous period? The continuous period is 9 o'clock until 12:30, the first continuous period. Second continuous period is 2:30 until 4:45. So this is the normal trading hours lah. So for here, you can straight away buy, straight away sell. If you use a market order, if you can also queue buy at the lower price or queue sell at the higher price. So all this depending on your order method. So before we talk about this, we need to talk about the type of order lah. So normally in your broker there are three types of order. One is limit order, one is market order, but you won't see market order lah. So market order is actually limit order in disguise. So let's say you want to buy, so this is 1 ringgit stock X. You want to buy this stock. People are selling at 1 ringgit. So and 0.99 cent people are queuing to buy. 1 ringgit people are queuing to sell. So this is the ask. So this is the bid. So if you use a limit order, you can queue behind the bid side. You can queue at the lower price, 0.99, 0.98, 0.97. So if people sell down the stock, then you will match with your order. But at the same time, you can straight away buy at 1 ringgit. So this is actually called a market order. Like you straight away get what the market offer for you. And you can straight away get the 1 ringgit. But there are also some hidden order, such as stop orders. For example, I can set a stop limit order. I set a stop limit order when the price trigger at the stop price, then it will execute a order for me, a limit order for me. So this kind of some stop order lah. For institution, there are also some hidden order. We call it iceberg order. That means that people they actually want to buy 1,000 lot, but then they queue 10 lot. After a match, they queue another 20, 30, 30. So they have algorithm for them to queue, but they don't want to show straight away 1,000 lot. If people want to buy 1,000 lot and it's shown there straight away, the price will be pushed up because many people see that there's a strong demand and people will buy up the stock very quickly. So this is how the three different kind of order shown on the graph. The first one is a market order. So market order, I will buy, if you see on the chart, means that I straight away buy at this price. So if you buy a market buy order, then your stock will straight away you get the stock and then the stock market goes up lah. For this one, if you if this before this up the three chart above is before, the three chart above is after lah. So over here, I can set a buy limit. I want to set a buy limit set here. I buy a sell limit by here. Now the price is over here. So the price didn't retrace to this price. So I queue at to buy at the lower price. I am not able to get the order lah, because if I queue at to buy at this price, the price didn't touch this price and there's no one selling the stock to me. So I won't be able to get the stock. And the stock may go up lah. So limit order, you may not be able to get the stock. But market order, sure away you get the stock, but you are not getting at the best price lah, because this stock they may retrace a bit and then only go back up. And there's also stop order. So stop order looks like this. The if the price touches this point, I want to buy at this price. So what happened is the price go up, touches this, break above the resistance, and then I want to buy above the resistance. So your broker will help you to, if you set a stop limit order, then your broker will help you to execute. Once the stop price is touched, then your limit price will be executed. So this is the three visual representation of the buy of your order. Same thing goes to sell. I won't repeat. Okay, so by knowing that, then we'll actually need to have some additional stuff to actually before we look at the video. So to monitor the depth of a market and techniques, enter and exit high. A better scalping method is you need to know the psychology level, you need to know the support and resistance level of their stocks. Because during, for example, support level, the stocks, if, whether the stock is trading on intraday, you are trading it for intraday or swing, during this psychology level, support level, the market depth volume will be high. So when the price is like a magnet is is attracted to that price, but then it won't execute at the price. So the price will actually because the volume is very high. So if people see that the volume is extremely high, there's a very strong buying intention at that price, then people may straight away buy back at the higher price, and then they will drive the stock up lah. So that's why knowing market depth is important, but then you also need to look at the chart to identify the support and resistance level at different price level to know that where is the psychology level. Okay, so this is the obvious level for your support and resistance. This one is another topic per se lah. So for sure, if you are an advanced trader, then for sure you would know where is the support and resistance level. Okay, so for example, this is the market depth 21 21104.8. 21104.8 is over here. For example, you are over here lah. Then you will see that 21104.7, there's a very high bid volume, and there's a very high bid volume over here. So when this kind of thing happen, normally retailer or uh, uh, normal trader see this kind of situation, they will stop selling because they see there's a strong demand, and then people see it like a wall lah. It's like a wall, wall, like a wall. If there's a strong wall, the volume is high here. There's a strong wall. People will stop selling, and then people may change direction and start buying. So from here, the stock starting to climb up again lah. So because the big volume queuing is large, and then people stop selling, and then this become the support level, and then people buy up the stocks. So for sure, it's not 100%. Of course, it's not 100%. You see a large volume, then people will stop selling lower than its price. Whenever there's a very significant bad news or there's a significant world event, the sentiment is very bad, then the stock can also be sold way below this price lah. This kind of thing will happen as well lah. So if you see this kind of situation, then for sure if you want to buy and take advantage, then you will buy at 21104.8. If you buy at this price, then this is the least resistance for you to get into the stocks. So if you want to exit, for example, at this point, you will see there's a high market depth with at seeing your market depth, you will see the large volume queuing as these prices. So before these prices, if you want to sell your stock, then you might as well queue before this large volume. So you are able to get out of the stock before they see the huge volume like a wall lah. Wall is like something hard to pass through. So you queue to sell at this price, then you get out from the market. So this is an example. So I'll go through some video because market depth is very hard to be shown without a video. So a video recording will be much easier for you to visualize what happened. So you only need to look at the CIMB. Okay, so this is actually the pre-opening market, auction market. So you are seeing people are trying to sell at 9.64 and people are trying to buy at 9.64 and people are trying to sell at 7.77. Once there's a friend ask me, if like that, I buy at 7.77 and sell at 9.64, I terus earn like a straight earn already. It's like that's not logic, that's illogical, right? That's because this is an auction market. Auction market you can put at any price. Bid you can put even higher than the selling price. Ask you can put at you can sell at a price lower than any price as long as between the limit. So this is auction price. So only you will see such market depth pattern. So after open, so let's look at the continuous market. Okay. So now the okay. So this is the market opening. So you see CIMB, so 23.4K. So suddenly there's a larger 8.31, 8.34. I will fasten from time to time. So 8.34 is still okay. So because 8.34 is relatively a large order, so people trying to sell down to a lower price lah. So this is a continuous market lah. So when you see when normally people you see suddenly I need to pause a bit. You see the volume suddenly spike up at the left side means that there are like people trying to queue to buy, and then when this kind of thing happen, then this will drive the stock price up because suddenly market players sees that there are very large demand at the bid size, and especially this is a support level. So if you see that it's a support level and then it's a suddenly there's a very large order queuing it to buy, then it will actually drive the price, the stock price up lah. So 8.29 large order, then the stock went up one tick lah. No longer 8.29 lah, so 8.3. So now bid, the highest bid is 8.3, lowest ask is 8.31. So this is the first level lah. So same thing, what will happen is actually you will see that 8.3 and 8.3 compared to 8.31, the 8.3 the volume Q buy is a lot higher than the 8.31 just now. So once such thing happen, 8.31 there's a Q volume coming in, then people will try to buy up the stocks lah. Because 8.32 people can't get at 8.31, they want to buy, but then 8.31 there's a lot of people trying to queue to buy. 26 people trying to queue to buy. So this one drive the stock price up lah. So same thing now, but the stock drop back down, and then at one point the queuing buy is very high again. Then subsequently then at one point at this point the 8.29 and 8.3 the bid and ask volumes both are also quite high. So we need to see which direction that it will move lah. So both sides are high, and the 8.29 suddenly the volume drop down. So normally when this kind of thing happen, then most of the time retailer will be scared off and they may sell off. So do you want to drop off? 8.28 is 8.29 queuing back to have a large buying volume coming back. 8.29 86K, and it's even higher than the ask side. Then subsequently, so you see keep on going up a little, and it's because the bid side the volume is st- they started to send in more buy order, so the volume is higher. So when you see this kind of thing happening, then it will drive the price go up. But this is only level one. Let's talk about a more in-depth stuff. So even though market depth is important, market depth is what people are trying to show to buy and sell at this point. But then there there may be some manipulation that can be happening on the market as well. So this iceberg order is not a manipulation, but then iceberg order is an order that will actually let you not see the genuine buy and sell order. So if large institution want to go in the stock, for sure, they only show a small portion of interest. If they show their entire interest, then it will drive the stock up or down very quickly lah. So that's why they put the iceberg order. There are different kind of manipulation, but today we'll be talking about spoofing and layering. So why is it called manipulation? Manipulation means that it's illegal. So if you see if you see Security Commission, they will issue some warning alert. They will be issued to all these manipulator lah. But then you will still see this kind of situation happening on the market. But then they are not so direct lah, so they are not detected. Okay, so for spoofing, so what is spoofing? So because due to time, I'll be talking about spoofing and then layering I will skip for now lah. So for spoofing, so what is spoofing? So I will use this. This is actually from Singapore SGX handbook. So I took it from there, SGX handbook. So they actually explain how the spoofing looks like lah. So for example, there's a manipulator and they want to actually they they actually there's a ask order here and a bid order here. Okay, so what they want to do is they want to sell 7 lot. Okay, they want to sell 7 lot. So if they want to sell 7 lot, they queue at the ask 7 lot and queue at the bid side 20 lot, 23 lot. So what happened is the market will think that there's a very large buy order, but then their genuine order is they want to sell this 7 lot. So what happened is the market straight away takes up they may take up the 10 lot, and then once they see that their order they successfully sell the 7 lot, they will actually remove the 20 lot and 23 lot. So actually this goes back to Bursa Malaysia and Security Commission ruling. So first thing, you cannot queue at the bid side and the ask side at the same time. So this is illegal. So this you shouldn't do. Any kind of participant, you shouldn't do this kind of thing. Queue at the bid, then queue at the ask at the same time. So this is very wrong lah. Second thing is if you keep put order and then remove order, this also if you keep on repeatedly put and remove order, then this also violate Bursa Malaysia and Security Commission ruling lah. Okay, so from here you can see that even though large order may appear, sometimes it's not genuine one lah. For example, the CIMB case that I shown just now is a real one, a real scenario that drive the stock up. But then when there's a spoofing, it actually means that they are trying to lure you to buy their stocks. Then once you bought their stock, they will remove their order. So this kind of thing may happen. Okay, so that's why market depth, you can try to look at it, but then take it with a pinch of salt. And also, as layering, layering is something similar that will lure you to actually they really want to buy, but then they set a different their junior orders they want to buy 70 lot. So they queue at different price level, they even match some order. Then suddenly they put a very large ask order. With this, you will see that actually the market is very bearish. A lot of people are trying to sell. So you queue at a bid price. There's market people queue at 9 lot, match 8 lot. Then once their order are matched, they successfully bought the stocks. They will remove this, and this will actually drive a gap lah. So with the gap, then it may jump up lah. So this is illegal, and there are real cases of market manipulation released by Security Commission Malaysia. You can see all this market manipulation news happening, news released to the market lah. So that's why even though we know there's such cases, we we need to actually take note not to accidentally be seen as a market manipulator. So how to not be seen as a market manipulator? One, not to queue at the bid and ask at the same time. Second, don't keep on buy, cancel, buy, cancel order. So this with these two, then you are much safer not to be seen as a market manipulator. Okay, and then the market depth is very dynamic and is a very big topic. So if you want to scalp using a market depth, you can take the large order queue. If it's a support level you want to buy, then you can straight away buy bef buy buy when there's a large bid volume. But then at the same time, there may be manipulation happening lah. So these are the stuff that you need to take note lah. Okay, I think I exceeded some of the time, so I will pass the Q&A back to Shane.
Thanks, TJ, for sharing with us the idea behind all these market rigging and manipulation practices, as well as sharing with us how do we interpret market depth. Okay, so if any question to ask our speaker today, please write a question in the Q&A box. Okay, just now I saw in the comments there were some questions already. Okay, write your questions at the Q&A box. TJ, I think just now when you explained about the cutting queue that created some kind of confusion, would you mind to go back to that slide and maybe you explain it slower? How do we cut queue during the auction time? I think I saw several questions asking about clarification on the cut queue.
Okay. Okay, so this is this is one example. So let's say you are seeing something like that. Then you will, by calculating, so to explain again, 1.24 people are trying to buy with a 3.5K volume, 1.23, 36.2K, 1.22, 43.8K, 1.21, 55.6K. So for sure you will see there's overlapping of price, 1.23, 1.24, 1.23, 1.24. So first of all, you will need to know what is the theoretical opening price, whether it's 1.23 or 1.24 lah. So you need to calculate based on rule number one, 39.7K. This is the largest. This is the largest match volume. So this is the most match volume that you can be seen, 1.23. So from here you'll see there will be 1.23. The sell side is actually higher than the buy side. So if you want to cut Q to sell, you can Q at a price lower than 1.23. Let's say 1.22. If you put a order during auction time, 1.22. In order not to trigger the okay, in order not to trigger the price, the TOP to become 1.22, you will need to calculate something lah. So from here, you would know that if you queue for 1.22, if you queue to sell for, let's say, uh, so from here, if you queue to sell on at 1.22, so this volume, if you want to take the entire sell volume and not let the TOP become 1.22, because now the TOP is 1.23, right? So the volume that you can put is 3.5K. Easier calculation, a quick glance is 3.5K plus 36.2K, and then you take away one lot lor. So if you queue at 1.22 and you add up this 39.6K, 39.6K volume, if you queue to sell at this volume, it won't actually trigger 1.22, because if you recalculate with all this 1.22, it will still be 39.7 is still higher than 39.6, the maximum trading volume based on rule number one. So if 1.22 is 39.6, then the theoretical opening price will still be 1.23. So I can cut Q to sell by placing a 1.22 price with a 39.6K. So I'm able to sell to the market at 1.23 price. I'm still getting the be best price, 1.23. And then after market open, I will able to sell all this 39.6K. All this match with the 1.23, 1.24. And then when you see the market open, you will see that the us side will be 1.24, 1.23. So people are still trying to sell at 1.23, the big boys or the larger volume people. So you with a smaller volume, you are able to cut queue and able to sell at at the same price, 1.23, but then you are cut queuing. Is that is that easier for you to understand?
So okay, if you understand, maybe you type okay or type yes in the chat box. Okay, I think this topic is quite deep. Yeah. For those of you who have who has asked the question about cut queue, right? If you understand the concept, you type okay. If you anything you don't understand, you clarify again. Okay, what you want to ask. Okay. Okay. So if you say you don't understand, maybe you if, can you clarify like which part?
Okay, so let's look
So
at
there's
more
another.
market depth.
Yeah, yeah, yeah. Maybe you
Uh,
do
uh,
more
do a
example. Okay.
more example. Okay. 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 The theoretical opening price will be 65 cent based on the calculation. So based on 65 cent, so this is at the upside. So if you want to sell at 65 cent, you can queue to sell at 64.5 cent. So the maximum match for 65 cent is 7.1. So if you queue to sell at 64.5, you won't trigger a lower TOP. The TOP will still be 65 cents if you queue to sell at 64.5 because Bursa will always try to match at the most maximum executable volume. So that's why if you if you know that the 65 cents is the TOP and you know the TOP volume is 7.1K, what you need to do is just to queue to sell at the price lower than 65 cents. And if there are no other player doing this, then you can get 65 cent TOP lah. So this is the application way lah. So if you are not familiar with bid and ask, you may still be unclear lah. But then this is how the auction market works lah. So if you are able to queue at a better price and but not so what you need to do is two things. You need to calculate what is the TOP. Second thing, you need to calculate what volume you put at a better price that won't affect the TOP. So with these two calculated, if you are able, then you can execute the cut queue lah. So this one is the cut queue to sell. So this is the cut queue to sell. So you can able to sell 7K based on this. Okay, so how do you
Okay.
benefit a pro? Okay, yeah, sure, Shane.
So the question by Shu is at what time can we know the TOP?
Okay, okay, so between 8:30 until 9 o'clock, you would actually see the floating TOP at the theoretical opening price. Because between auction time, then Busa will indicate for you the TOP. But
On the
then,
quoting screen, lah, correct? So the TOP is a
yeah,
variable. Some it changes from in that duration, right? From 8:30 to 9 a.m.
yes, correct. So between this timing, the TOP will be floating. And then on the before 9 o'clock, you would actually execute the cut queue. If you want to execute the cut queue, you will need to execute right before the dot lah. So normally 9 o'clock there will be a lot of queue. It's harder to calculate. So if you want, you can as long as the auction market, then you will see the theoretical, the floating TOP, which is 8:30 until 9 o'clock, 2 o'clock until 2:30, and also 4:45 until 4:50. All this you will see the floating TOP. And then if you see there's opportunity, it's not every time there's opportunity for you to cut queue lah. But then if you want to get at a better, if you are able to do that, then only during the auction time you need to spot for the opportunity lah.
Okay. So the next question is how do we benefit from this analysis?
Okay, so let's say you want to buy and then you are able to cut queue, means that you are able to get the stock straight away. And once you get the stock, other people may not even get the stock, but then you already have the stock and then people are still queuing to buy. So isn't that an advantage by itself? So you are able to, it's just like you are queuing up, you are able to cut queue to be able to get at the front queue, so you are able to get your stuff earlier. So you're able to buy earlier or you're able to sell earlier with the with still the best price. And
Mm,
once you able to cut queue and get the best price, people are still behind your queue trying to get the best price when the market open.
Would there be people who do manipulation during the auction period? Like they do
Manipulation.
spoofing on one side and the other side, right? Bid and ask. Does it happen?
During auction time, there are trader. I mean, like all those there are those big trader lah. They will try to test because during auction time, especially 8:30 until 9 o'clock, there are too many levels you can't even calculate. So people may try to put in order and then cancel their order. So this kind of stuff you would see lah during auction time. People put in order and then cancel their order just to try out what are the TOP, or they just want to test out something. Or even sometimes you will see one lot at each price level, which means that people want to hide the entire market depth. They don't want you to calculate. So this kind of thing happens. So all this it's not called manipulation, but then it's just to take advantage of to not let you see the information. Yeah.
Yep. So that leads to the questions asked by Steve. He said that many times we can see there are many continuous repeated orders for only one lot. Are these traders trying to manipulate the share price?
Okay, there are few scenario, but the best explanation for this will be actually they are actually PDT lah. They are actually prop trader. So they want to because prop trader their commission their trading fees are very low. So what they want to do is they want to use one lot to test what is the opposites who is the opposite side. So they are using one lot. They they're using one lot to buy the opposite side. Which let's say there are people queuing 4.42 for 0.425, and I just buy one lot at 0.425. Then when this happen, because only if you have a transaction you can see the opposite side. So if you want to know if you are buying, you want to know who sold the stock to you, you can look at your broker lah. That one is available in your broker. So PTT take advantage of this to understand who is their counterparty. So they want to know who are selling for the 2.5 0.425 cent. So that's why they sometimes they will put one lot to buy. Another scenario is actually they want to lure people to buy in the stock because when there's one lot, then it will appear on the transaction list. So some platform or some broker they will show all transaction lists. So if they say one, seems like there's a very strong interest, then you may go into the stock. So there are different kind of reasons. I've explained two kinds. Yeah.
Okay, so I actually don't even know that we can see who is the counterparty that buy from us or sell to us. Is it you say it's available on the brokerage platform, or
Yes.
do we need to ask the broker?
Once you bought the stocks or you sold the stocks, you need to look at your order transaction status. Then they will show it's not exactly the person, it's actually the broking house. So you may see Maybank, you may see RHB. So you will actually know the counterparty lah. So for PDT, they actually they just want to know maybe who is the counterparty, or like there are other PDT in the market. They want to know who are there queuing to sell so that they can react to the information. For example, if they know that it's a very ganas seller at the site, then they may do some different strategy or something like that. So that's why they want to find out the counterparty. So it's available in your broker lah. As long the order is matched and you need to look into the order transaction, then you will find the counterparty.
So we can only see who is the who is a broker as a counterparty. Right? We can't see the account number as such, right? All right.
Yeah.
So the next question by Steve is sometimes immediately after 4:50 p.m. the price of the share jump up significantly or gap up, but at the next day open the price drop back significantly. What is the reason? Is it share price manipulation?
Okay. So this one, if you see this, most of the time is during month end or during rebalancing period of the fund. So and because in their fund they may be adjusting the price. No, not to adjust the price. They they want they so for example at the month end, for example at the month end, the fund want to close the price, but then they need to rebalance. Rebalance means that they based on the scenario they need to buy a lot or sell a lot because that's their mandate. For example, during COVID, if the market go down a lot and then a lot of people withdraw from the fund, so they can't do anything, then they need to really sell in in the real market and then they need to refund the cash to the holder. So the fund actually has the need to carry out all this kind of operation and rebalancing happens sometimes is they need to sell off certain stocks and then buy in another other stocks. And sometimes you would call that this period when I'm not sure whether
Window
word is correct or
dressing,
not.
is it?
Window dressing, yeah. For certain fund, they want to pump up the price to show a better result, maybe. So during month end, there will be some this kind of operation, but sometimes it's just some rebalancing activity happening.
Okay. The next question by KK is that I've seen some buying and selling volume are different amongst brokerage accounts or different platforms. Is this a common thing, or there are different buyer and different seller amongst different platforms?
Can you repeat the question? I don't really get it.
Maybe KK you clarify a little bit. Okay. Uh, I repeat. So I've seen some buying and selling volume different amongst the brokerage accounts or on a different platform. Is this a common thing, or there are different buyer and sellers among different platforms?
Okay, I believe that certain platform they will aggregate the buy and sell or transaction order. Yeah. So if if you this one there may be this may be one of the reason. Another reason will be lagging, the latency issue lah, which means that certain platform is slower and certain platform is faster. Else
Right.
they may be aggregating the order lah.
All right. Um, then the next question by Mark is that sometimes you see the price jump up 2 bits or jump down 2 bits with low volume. Is this a form of manipulation?
Jump up 2 bits with low volume. If you are looking 2 bits, it 2 bits with low volume. I would say that people are trying to close the price. If they are able to mark the close, they are able to mark the closing price with a very low effort and it's to their benefit, then they may do that lah. But then it's not a manipulation lah because they are really buying or selling the stock and they they may want to show better price for their portfolio or probably yeah, but then it's with just by using a small volume to trigger the two bit up, two bit low. Yeah, I try to visualize your question. So I believe it's marking the close lah. They are trying to mark the close. Yeah. Marking the close. If you do it too rapidly, then it's actually a manipulation lah. But then occasionally it's okay lah.
All right. So we've run out of questions. So we run out of time. Let's do one last question. Okay. I think this session is very technical. So there are a lot of technical questions. So during the auction period, is that illegal to put in orders and then we cancel the orders?
Okay. It's um this I'm not too sure, but what I think is if you are doing it for like once or twice, it's okay lah. But you are doing it for too many times and you are just trying to test out, then better be careful lah. Because you you have your transaction, I mean you have your orders stand, then you cancel, send and cancel. Even your reminder or dealer will be asking what are you trying to do. So if you are doing for once or twice, it's still that's not a problem because we may change our mind, we may change our order. That's a normal human nature. But then if you are doing it purposely for your own benefit and do it for too many times, then it's better be careful lor.
All right. Thank you so much, Ting Jin, for sharing with us market depth and advanced strategies for scalping, right? So, ladies and gentlemen, you just listened to the Chief Operating Officer of Tap Optimus, Mr. Charlie Yuan Ting Jin. Thanks, Charlie.
Thank you, Shane. Thank you, everyone. Have a good day ahead.
All right, so our next webinar is a Mandarin webinar that is titled "财务规划步骤与股票投资." It's happening on 10th of March 2025, next Monday. So if you want to learn how to do financial planning, please register for this session that's happening on next Monday. I've just given you the link in the chat box. And for those of you who are looking to open a new trading account, you may scan the QR code or click the link that's just given you in the chat box. All right. So with that, I want to thank all of you here for staying tuned until the end of this webinar. I believe the session today is very, very technical, and you may want to, rewatch the replay if there are areas where you feel that you need more clarification. So you rewatch the replay later when you send you the link tomorrow, so that you can grasp a better understanding of this market order, market depth, and order flow analysis. All right. Thank you, everybody, and hope you have a great rest of the day. Bye bye.